Welcome to the tutorial on auditing. This is the fourth and last part of the introductory issues on auditing. In this tutorial, we are going to learn about the purposes of showing more or less profits than what actually they are, as well as we will learn the possible ways to falsify the accounts. What are the purposes of showing more or less profits than what actually they are? We can see the purposes of showing more profits are to get commission on profits. The higher level management has a intention to get commission on the profits. If there is a bonus plan for the managers on the profit, in that case the management will try to get the commission or bonus by showing more profits. And the second purpose is to retain their services. Here there means the management. To retain the services by the management by showing their efficiency. If they can increase the profit, the shareholders will consider that the management has the efficiency. That's why to retain their services by showing their efficiency in posting profit for the shareholders. And the third one is to sell the shares holding by them. The directors or the higher level management has the intention to sell the share in high price. In that case, they show more profit to increase the price. When the price is increased, they sell their shares. The higher level management declare higher dividends to increase the price of the share, and when the price is increased, they sell their shares. Fourth purpose of showing more profits to obtain further credit. Here credit means bank loan. Wherever your company can earn a good profit, in that case the bank from which you are interested to take loan will focus on you to provide the loan. That's why to obtain further credit, bank loan, by showing the financial position of the business better than what actually it is. And the fifth purpose of showing more profit is to attract more subscribers for the sale of the shares of the company. These are the some purposes for showing more profits. And what are the purposes of showing less profit? There are also benefits for the high level management if they can show less profit. We can see whenever they have intention to purchase share, in that case they try to decrease the share price. If they can show less profit, the price of the share will decrease. In that situation, the director or the higher level management will purchase the shares. And the second purpose of showing less profit is to reduce or avoid the payment of income tax to the government. Third purpose of showing less profit is to give a wrong impression about the success of the business to the competitors. These are the some purpose or objective of showing less profit. And as an auditor, you must be knowledgeable about the purposes, and you have to focus on these issues whenever you are auditing in a public limited company. Here we can see the possible ways to falsify the accounts. Here you are going to learn this topic to get idea to prevent the falsification of accounts. As an auditor, you must be knowledgeable about the ways by which management tries to falsify the accounts. We can see the possible way. The first one is by not providing any depreciation, or providing less depreciation, or providing more depreciation. If any depreciation is not provided, then there will be a high profit. If there is a less depreciation, there will be a high profit. If there is a more depreciation, there will be a low profit. In both situations, there might be a bad intention by the higher level management. And the second possible way to falsify the accounts is that by undervaluation or overvaluation of the assets and liabilities. And the third way, showing fictitious sales false sales. There may be no sales, but if you show sales, or there may be a little sales but you are showing high sales. Whenever you show fictitious purchase or fictitious purchase returns in order to show more or less profits. Fourth one to falsify the accounts is the utilization of secret reserves during a period when the concern means the entity or the institution has made less or no profit without disclosing that fact to the shareholders. If there is a secret reserves, that reserves may be utilized by the higher level management to leveling the profit. Whenever there is a less profit or no profit, in that case they can utilize that secret reserves. And the fifth way to falsify the accounts, considering revenue expenditure as a capital expenditure or considering capital expenditure as a revenue expenditure. And the sixth one is crediting the revenue account with the income which will be received next year, or not crediting the profit or loss account with the income which has accrued but which has not been received. So these are the some ways by which the higher level management or the directors can falsify the accounts. As an auditor, you have the responsibility to focus on these issues to find out the true facts of the recordings or the financial statements of an institution. Thank you.